The United States and China have agreed to a little bit of a kind of trade deal. It's a little bit more of a trade truce or a band-aid, if you will, which is why markets dipped after this news. It wasn't exactly what the market was hoping. So let's talk about what was in this deal and why the markets dipped. In short, this deal just didn't exactly do enough. But what it does is it puts a pause on any export controls that China could or would put on the exports of rare earth minerals, which could potentially bar rare earth minerals from going to the United States. So that has been delayed for an entire year. China has also agreed to purchase 12 metric million tons of soybeans from the US, which is very important for US agriculture. There is renewed cooperation by China to fight the inflows of fentanyl into the United States, right? These are all good things. And also the tariffs were reduced. And this is the problem in the eyes of the market. The tariffs were reduced from 57% down to 47%. Still, incredibly high. That is why the market was disappointed with this deal and ended up resulting in a sell-off. If this had been down to 25% tariff, something similar to the other trade deals that had been agreed to and negotiated, this would have been a boost to markets. But instead, a 47% tariff is still a very high tariff. And in the meantime, we have a one-year truce agreement, if you will, as opposed to a true long-term trade deal that does add just a little bit more uncertainty. We didn't quite remove that uncertainty about this trade war between the United States and China. We just kind of kicked the can down the road and made things a little bit better. So that's why the market was a little disappointed by this news.